following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broadway, Philadelphia, Pennsylvania. We're going to start out with the DAX. As you can see here, we've had a little bit of a downturn on that market that we were on the 4-hour chart that we were looking at. That was right at that 61% retracement. No surprise there, so we need to pay close attention to the DAX. It could be in a little bit of a corrective mode here. We've been down 11 days in the Dow Jones Transportation. That has set a record, folks. That has not happened in the last... It's only happened 5 times since 1884, and that was the very first index that we had, even before the Dow Jones Industrial. So that's a very important thing. What's interesting is after those 5 times when the transportation was down 11 days in a row, the market did go lower eventually. Now, let's take just a quick look about what we did Friday. We made a prediction, of course, that using the artificial intelligence and program that I've worked on, showing that the Dow Jones, the S&P or the Dow Jones, they were the same charts, was going to bottom right around 10:15 in the morning. The low of the day was 27.27. The low that we were looking at came in at 27.30. We came back to 27.850, and then of course you can see that we did rally up. Now these were based on the key time of the day. We don't know whether it's going to be a high or low. We're going to look at it today just quickly, just to show you what I'm looking at, because here's what we're watching today. You'll see this is the market continuing on from Europe. What we're looking at here is at 10 a.m., and that's near magic time anyway, between 10 and 10:30. You can see that we'd be making a 1.618 expansion up there at 27.62. The 1.27 comes in at 27.60. So somewhere in that ballpark is where I would be looking at a high. Now, if the market is breaking really hard at 10 o'clock in the morning, which is an hour from now, this would be an inverted pattern, and you'd be looking for a buy. You just flip it over and reverse the process. Anyway, that's what we're watching. These markets are based on vibrations, and that's what you're looking at here. This forecast was made 2 days in advance. And that's what I'm watching today. Now, we're going to do something just a tiny bit different today, folks. We're going to bring up a chart from our friend down in Sarasota, Florida, Tim Bost, kind enough to send it on to me. This is the Mercury retrograde. And if you'll notice here, what's been happening to the S&P 500 when the Mercury retrograde kicked in between the 15th of November. And you can see all the way through, it ended up on December the 10th. The market didn't bottom until the 26th. And if you remember, that 26th was a really big day because that was the exact 61% retracement in almost everything. The Dow Jones, the NASDAQ, the S&P, the Russell, the banking index, all of those hit there on December 26th. If we ever go below that 26th low of December, there's trouble in River City. I don't think that's going to happen soon, but eventually that could happen. But keep a very close eye on that. That's another one that looks real interesting. Also, we want to watch the, this is the Treasury bond, it is a Treasury bond from Germany. This is the German bond equivalent to our 30-year bond. You notice it had that big drop down, had a little bit of a rally. And evidently that was a legitimate drop because I've asked them to check the prices, and they assured me that they were. Now, I don't trade the bond. I don't look at it, but I do watch the price action because it's got such a beautiful long-term pattern. And we'll see this. Okay, Mr. Z's asking, it is a timing tool. It's only based on time, Mr. Z, the AI program. It's based on time only, has nothing to do with price. What it's saying there is there's a vibration in the E-mini S&P that says there should be a very strong trend change right around 10 o'clock this morning. Now remember, this was done 2 days in advance, so it's pretty hard to say whether it was going to be a high or low, but this was never developed to be a place to look at a high or low. It was to give you a timing tool to see whether the market would actually make a timing high at that point. It is based on the premise of the Tomahawk missile. The gentleman that did this AI program was one of the lead programmers for that. And the whole principle of the Tomahawk missiles, once it comes out of the submarine, it is programmed as soon as it hits the open air, about 100 yards outside of the submarine. It starts to trigger in. If it is good vibrations, it starts to hone in on what it's looking for. And it is so good that it can tell the difference between different types of whales. It can tell the difference between a German submarine, a Russian submarine, a Chinese submarine. It can tell differences in flocks of geese. It can do, fish, everything. I mean, it's just really incredible what it could do. And as it gets closer and closer and closer, it hones in on what it's looking for. So if it's looking at a chemical factory, it can see the difference between that and a hospital. If you remember the war in Desert Storm, the Navy SEALs went in and planted those guiding systems the night before or the day before. And when those missiles came in, they were just spot on. The yellow submarine. Very good. We always have to have 10,000 comedians out of work, and Terry's finally got a job. That's a good one, Terry, saying yellow submarine. Anyway, let's remember that it's just and it's only right part of the time, but it's a timing tool. It has nothing to do with price, nothing at all. So just remember that that's the key thing to pay attention to. We are certainly due for a little bit of a rally. We've been down hard all last week from early in the morning all the way through, till the middle of the day yesterday. So we'll see if that's going to be the bottom or not. We don't know, but we should have a little bit of a bounce. I'm looking for a 1 or 2 day bounce, and then we'll see whether it continues to go down. Remember that the real bearishness. No, this is not long term. No, this is only based on intraday work. In fact, I do Asia, Europe, and the U.S., and it's only for intraday, and I look at 2-minute charts because it was based on that type of accuracy. So I think I've told the story how I got involved with this thing many years ago, but no need to tell it again, but we'll do a couple other things here we're watching. The thing that this chart with Tim Bost is really important because if you've ever read Andrew Lowe's book, The Evolution of Technical Analysis, it is really an incredible book because he talks about the Babylonians and the Sumerians and stuff, how they did those things, and it was really really amazing. Ruby, you are up next on sugar right after the break. We're going to look at sugar the sweet for you. It's down near that support level of 12. Whether it's going to hold or not, we'll have to wait and see, but we don't know, but nobody else does either. We're all basing this on the amount of risk that we're looking at. But we'll cover sugar right after. In fact, we'll look at sugar, probably cocoa and coffee, just because they're all looking at the same type of patterns here of some type of a major bottoming in here. So that's a key thing to look at. So we're going to take a break here, pay a few bills, and we'll be right back with you. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, we're going to take a look now at Sugar the Sweet. I posted that one. Then I posted the coffee, and then I also posted the cocoa. Sugar is very interesting down here at this $12 a pound level. If we get there, very, very important. As you can see, we're approaching the 95 level in the coffee again, another possible important bottom. And then, of course, the cocoa at the 2140 level. All of those look pretty interesting. Now, over the weekend, our good friends at Goldman Sachs came out and told us that they had mitigated their bullishness in the commodity complex because of slowing economic growth. Now, this is the same group of people that told us way back in October of 2007 when we had the crude oil setting at $144 a barrel that it was a mortal lock to see crude oil at $200 a barrel. I believe those were the words they referred to in that move. And it was within 2 days of the all-time high in crude oil, where it had a slight retracement from $144 a barrel down to $31 a barrel. So remember, folks, just like listening to me or anybody else, it's not what you hear, it's what you see. So pay attention to what the charts are telling you, because it's interesting, because just because someone says it so, including me or anybody else, doesn't mean that it's so. It's all about risk control. It's all about an opinion that you must have, and taking that opinion and the responsibility behind it and then moving it forward. Now, something big has happened in the last 3 hours over across the pond in the UK. Couple of our friends actually have brought this to our attention. I'm going to post a chart that was in the BBC, done by the BBC over the weekend. This is about this upcoming vote that we have for Brexit. You'll notice that March 12th was the key date. And basically what they were hoping for in the UK, those that wanted Brexit to fail, was to see the first 2 votes to fail and then the last vote to pass on the 29th. That means it would go to referendum again, and that means that would be different. But today, folks, Theresa May changed the rules. She moved to what they called a Fabian Society rules, and that basically means that it's a stall and just stalling technique is what it is. In fact, the emblem for the Fabian Society over there is a wolf in sheep's clothing. This is all based on the fact that when Hannibal tried to attack Rome in 200 BC, coming up from North Africa, that Fabian, the Emperor Fabian, what he did was he put as many troops as he could around Rome just to stall him because he was coming across the Alps, and it took a long time. And by the time that time passed, Hannibal was not able to attack Rome, and so that was the start of the First Punic Wars. Anyway, if you believe I learned all that stuff by myself, I still have 2 shares of the Brooklyn Bridge available, but sorry, they're all gone. They were just sold. Folks, I have to tell you, this is a great week in investing here. And anybody that guessed the importance of March the 13th of 1986, anybody that guesses that gets a free prize. I mean, it's going to be a beauty. I haven't decided what it is, but it's going to be a free prize. You've got another few seconds. Uh-oh, we've already got a winner. It is the day, March the 13th, 1986, when William Gates and Paul Allen came out with an opening price of Microsoft at $21 a share. Okay? Now, today, if you would have bought just 10,000 shares of Microsoft at $21 a share, you now have 188 shares for that one share that you bought. Those shares, folks, are worth 15 million. That's including appreciation and dividends. Now that is a pretty good investment. That was over a 33-year period, but still it's going to be pretty hard for anybody to beat that one. So we'll see. Excuse me, folks. I want to move on to talk to you about the Treasury bond market because there's the computers will never catch on. Yeah, Bill, I have that book, The Experts Speak, and it shows how computers were never going to catch on. I mean, it's just truly amazing now. They've got an idea going out there now that you're going to be able to have a telephone in your hand. Just carry it around. You don't even have to go to stop and, payphone or anything. You can carry this telephone in your hand, and it's going to be able to take pictures and send messages even if you're not talking. Isn't that an amazing idea? I don't know if it'll ever happen or not, but remember, I still am outstanding questions about color TVs and microwave ovens, so we need to pay close attention to that. Folks, I might have made a mistake. Well, I make lots of mistakes, but I might have made a critical mistake here in one of the markets that we follow. I've been very bearish Treasury bonds for a very, very long time, but there is a possibility here that we could get one heck of a rally. Let me bring this to your attention. I was looking at this over the weekend, and I said, oh, my goodness, we got to pay attention. You'll notice the ABCD pattern. We saw that one pretty clearly down there at that 143.16, 143.20 level. Mr. Z in the room pointed it out. It was just a tad below the 382 retracement. But what I had missed here is the fact that the head-shoulder pattern, as you can see there, is perfectly symmetrical, and that's from May to October to March. That's a very, very important pattern, folks, because if this thing breaks out to the upside, and it could just because of flight to quality or a bunch of 100 reasons, who knows, it could really be one heck of a move. All it would be doing would be making a situation. No, you can forget about the you can forget about the boat ride, folks. That on the weekly chart of bonds would not even be a 382. It would be right at almost a 382 retracement for the high at 177. So that's all it is. And I'm not saying that it's happening. If we go below that 143.08 level, then that's not what we're going to be looking at. So let's keep in mind, that's what it could possibly be. But that's a very good pattern. Now, we do not see that in the Treasury notes. You'll be able to see here, well, this is just a shorter term version of that, but we don't have anything like that pattern in the notes. The notes are still up at the 78% level, and this may be all we get. I don't know. But it's it's a double. Yeah, I'll double up. I'll go on 2 boat rides. If you get me out there in the ocean, I'll even take the ride back if you can get me in the other boat. I don't know. It's just a head and shoulders pattern, and right at the 382 I mean, it's certainly nice little ABC, good for a bounce. Whether it's going to be but long term, boy, that's not going to be. Well, that's just. If you look at that long-term chart on the bonds, folks, that was the end of a 32-year bull market, and that where interest rates are going to go higher. The question is whether they're going to go higher now or 2 months from now. The problem is that we're looking at this darn thing at a really interesting time in history. Now, let's get back to that Theresa May thing, because all this could be interrelated. We were watching the British pound, as you recall. We had a very, very strong, buy signal, what we thought was coming in here from the short that we looked at up there at that at 133 level. We got down to 129.60 last night. That was right at the 61% retracement. We're now trading at 130.50. That's because of the news that came out early this morning that Theresa May's changing the rules. And what we're going to do now is we're going to take a little break, pay a few bills, and we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, I want to take a look at this long-term Treasury bond chart. This is a weekly chart going back to 2015 when we started to make our top, into the spring of 2016 when we hit the 176 level. And that 176 level is really suspect because that's when they had the Maverick contract at the Merck and they had to actually, it was the Board of Trade. Well, it's all one now, but they changed that contract, and that's why you have that difference in price. You'll see that the 3 drive to a top pattern happened from July of 2015 into June of 2016. Double ABCD pattern. I mean that, and on the long-term monthly chart, that was also a major 1.618 expansion. And since the last 2.5 years, we've gone from 177 down to 137. That's a lot of handles, folks, 30 handles. And you see we had to rally back to the 382. That was an equal rally from 2017, just like we had in 2019. But if you'll see the dark line there right above the equal rally that takes you to 154, if that is a head and shoulders pattern, folks, that is the price objective that you'd be looking at on that head and shoulders pattern at 155. That's 10 handles from where we are right now. That would be a monster move in Treasury bonds if it happens. So if we clear 146 and a half, 146.16, that would be the first indication that we might get there, and then clearing 149, that would be the second, and then we could get up to that level. But above 154, 155 it's going to be really difficult for them to do that. So that's what it looks like on a long-term basis. And of course, when you trade longer term like that, you have to have the nerves of steel. You have to have the pocketbook of, one of the boys from the Mayan city where they had the city of gold, because it's going to take a lot of swings in there. But they just keep in mind, below 143, this head and shoulders pattern is no good. But it's possible, so that's why I'm looking at it. It's just a probability of what we're watching as we look at some of these things today. So let's just remind ourselves that we have a really nice chart to show you folks here, going back to 1895, since we were talking about the Dow Jones. Transportation was the very first index to come in 1884. This is an old Gann chart from one of our good friends over in Italy, in the southern Italy, with his beautiful olive gardens out there. So that's it. One other little matter that we got to take care of. This is a message for Dollar Bill down in his 10,000-acre ranch just south of Dallas, Texas. Dollar Bill, you sent me an email, and I tried to respond to it, but it keeps bouncing, buddy. So give me a call. Haven't seen you in a long time. I hope you come by and visit. But please give me a call, and we'll set it up. I'll be here. So let's take a look at it. Anyway, here's this chart from WD Gann. Remember, you're looking at the Dow Jones Industrials back in 1895. That started in 1894. The transportation started in 1884, I believe, and you'll see the 3 drive to a bottom pattern that you had there in 18. Now, I put these green lines in, folks. These are all mine, the Gartley patterns and the swings. What we're looking at are the swings that were here. Remember, they barely had radio or electricity back in those days, so they didn't have charts like this. These were done mechanically, I guess, and these are Gann's charts. And these are just simple line charts. This was long before candlesticks or anything like that. But you can see the patterns, the ABCDs. You can see the retracements. I mean, nothing's really changed. These markets are doing the same thing they did, 50 years ago, 100 years ago, 150 years ago. It doesn't make any difference. They're still making the same types of patterns. Remember, the only thing that they can do is to go up, down, or sideways. And that's what you're trying to determine of what you're looking at. So keep in mind that's what we're watching. Now, here we are. It's 9:30, a half hour from where we're looking at the key price to come in, and we're now up near the 2760 level. We were looking at around 10 o'clock at 2762. That would be the area that we would really like to see if we can get to that level. I believe that the actual price is 2763. If that's there, that time and price would be squared. It would be interesting to see whether that's going to happen or not. Now, let's talk just back into that situation with the currencies again, because we've got a big thing happening possibly in the currency, folks, and that is, if you'll notice here, this is the long-term weekly chart here on the euro. Hopefully it'll be the euro. Just a second here. I think it will be. Let's get it over here. Yeah, here we go. Here's the euro. Now, yesterday, if you remember Friday, we bounced all the way down to 111.90 and it quickly bounced back 25 points almost immediately. That was near the close on Friday. To now we're up about another 20 pips today. There's a possibility that this was a fake out, folks. A very, very strong possibility of that. Now, if we go back below it, then that possibility is nada. But right now, there's really a possibility for that. And if we take a look, and we're going to, is if we take a look at this dollar index on the daily basis, you'll see here on the dollar index that there's a possibility we went up and we made a double top from where we were back in November. Now, the question is this a double top? If we close above that level, then it's not about double top, but there's a possibility of doing that. Remember, folks, the euro is the largest single traded thing in the world. Nothing even comes close. So, there's a lot of money involved there. There are people, they always say follow the money. Well, that's where the money goes. So pay very, very close attention to that. The reason, in my opinion, from a technical standpoint of why that's so important is if we look at the dollar index on a little bit longer time frame here, taking back to a weekly chart, you can see the beautiful head and shoulders pattern that we had. Folks, we've already taken out the right shoulder there at 97.68. We've taken it out. Now, that could be a double top. That's why it's so very, very important because, these markets will trick you a lot of times, and you want to pay as much attention to it as you possibly can. So this is one of those times where you really need to do it. Now, whether any of this is related to the shenanigans that are going on with the Fabian Society and Theresa May and all that stuff, I have no idea, but nobody else does either. I'm just looking at the charts, and the charts are telling me, hey, pay attention here, buckaroo, rise and shine. There might be something to do. So we need to watch that very, very closely here in these currencies. That was the primary reason why I sent out a special video over the weekend referring to we had some really nice positions in the British pound that have made quite a bit of money. We already talked about that. We had 300 handles in that one in the British pound. The Canadian dollar was doing really good, and we decided to take the profits in the British pound for two reasons. One, it was a substantial amount. Second reason was right at a 61% retracement. And when you threw in all the stuff that was happening with the political thing of these votes that happened on the 12th and the 13th and 14th in the UK and something really crazy happening, and it could happen in your favor, but it's a little different. When we were short the British pound, way back when Brexit happened at the 152 level, we happened to be in that one, and it was a beautiful 61% retracement. We went all the way down to that 120 level, went up to a 78% level at 144, down to the 78% level at 127, and here's where we are right now. We're in a slight uptrend over the last 4 or 5 months, and we'll be right back. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we've been asked to talk about this British pound situation. What we were looking at when the market was reaching that area of 133, if you go back to the January 14th low, which was a pretty nice retracement there, and counted the number of bars from that low into the high that we made on the 28th, 14 bars, and then came down to the 78% retracement on the 14th of February, and then up into the high 28 days. So you had two 14-day runs. That's an ABCD pattern, right spot on. Remember, this is a daily chart, so it's pretty significant. And it was also a 1.27 expansion of the January 28th high. And if you look at the time frame between February the 14th and February 28th, we had a little bit of a ABCD also there where you had a 382 retracement. So you had two ABCD patterns completing at 133.50. You had another ABCD pattern competing at 133.50. You had the 1.27 completing at 133.50. So you had three numbers there that gave you a pretty good idea that that could be a potential high. And not only that, it stayed there for 2 days. So it was not a session of where you want to be looking at something, really crazy. But that's that's what we're watching. So I don't know, but that's just what I was looking at with the British pound, and it worked. Some of them don't work. That's for sure. That's well, you got to remember that. That's very, very important. I'm going to be doing something for some folks in Australia Tuesday night, and I wanted to show you a very interesting pattern here in this Australian dollar, since we're talking about currencies quite a bit, and I don't think it has anything to do with Brexit. But look at this beautiful pattern here that we have going in the Australian dollar. You've got a head and shoulders pattern going back to the 27th of October. You had the big bank robbery done by the Japanese bank back on the 3rd of the year, January, when they pushed everything down. And then you'll notice that they've made a beautiful 50% retracement with an ABCD structure spot on. Where the right shoulder is equal to the left shoulder. All of that lines up just really nicely. So, hey, we got a caller from Washington, the state of Washington, near the Oregon River, out on his little tractor, probably pushing snow away. Marshall Robinson, what is happening in the world for you and Lenny up there? What's going on, buddy?
Well, the snow is 40 feet deep, and so is the BS.
Yeah, well, there's a lot of that down in the Tucson area, and you know what? It never melts. It never melts, Marshall. We're having a really bad day today. We're going to have a wind chill factor of about 72, and we got rain coming in. So what can I help you with, buddy?
Well, I was going to talk about the S&P. According to Bost and others, it looks like we're just about ready for a pretty good decline in S&P. Will your 1.618 bar come into play, do you think, on this down move, like from off of, December 26th? Where you go 1.
I don't know about that. That December 26th bottom was so big, Marshall. The only thing I would be looking at is if Tim's correct on this down move into the end of March. If we got at the most, I would think a 61% retracement of that move, because the long-term picture in the stocks doesn't look bearish, because those lows of December 26 were so important. You know, I talk about it every week, but nobody listens to me. But technically, that's like what we saw back in 1982, 1974, 1987. You don't see big numbers like hit everywhere. I mean, when they hit all together, you know, that's a little different. But those are really key numbers.
Okay, then you don't think it'll go lower than that for a long, long time, then,
no,
right?
I don't believe we're going to take those December 26 lows out for, quite a while. But, that might be till Thursday. I don't know, the timing of it. But,
yeah,
that's big numbers. Those were weekly numbers. And they hit them right on the money, Marshall. I mean, they didn't miss them by 2% or 1%. They were spot on. You don't see that kind of action. And that's why technical analysis gives you some type of an advantage, is because when they hit those numbers, they are flat spot on. So that's what I'm looking at.
Well, very good. I'm glad to hear that.
Are we going to see you this spring?
Well, not for at least 3 weeks.
Oh, that's good. Well, I'll be back by the 1st of April, so we'll get ready to see all of the plants come in bloom, and we'll have maybe a margarita or two.
Okay, well, I'm planning on being there the 3rd.
All right, we'll look forward to seeing you and Lenny both, buddy.
All right, take care.
Yeah, thanks for calling in. All right,
Bye.
folks, here we are. It is 13 minutes to the hour, and we are now at 27.64. That's within a point of where we're supposed to be. Now, the key point is, with 10 o'clock, if we're there and we're below the 27.63, then you have everything pretty nicely lined up. Now, remember, this was done 2 days ago. This was done way back on Thursday. So there's 2 days action in here looking, and let's just move this over here, get this up here and take a quick look at it. And you got to just be patient with this, because this Tomahawk missile has just left the submarine, and now it's heading for the chemical factories over there in Iran, and we're going to see if they're going to line this up or not. But we'll still be on the air in 12 minutes, so we'll know whether it's going to be right or not. That's for sure. And you don't have to risk a lot on this, because trading a contract that's 27.64, the most you have to risk would be 7 points, would be my guess. So let's just take a quick look at the gold market, because I believe we're looking at a potential in the gold, to pull down to that really key level of we're down, $68 in gold. So a nice retracement here of about $17 from the high, taking us down to about 12.88 again, would be a very interesting one to watch, because it's got a pretty good possibility. You'll see here, if you'll just bring this up to let you see what we're watching here potentially in gold for today. We'd like to see it down to around that 12.88. You can see that would be a 61% pullback. The 1.618 expansion came in, spot on. 12.84 was a number. We got down to 12.81. And now if we get that and get an ABCD rally up to that 382 level at 13.08, that would be is what we were watching. Stay tuned, because Maria will be on top of this like the wolf in sheep's clothing, and you'll be able to spot her trades. And she's very, very good gold trader, along with NASDAQ. And listen to Mr. Z and some of the other folks that post in the room, because they got some really great ideas. I just posted the ES chart. I thought I did anyway. I hope that helps. We'll see whether it does or not. I'm not sure. Boy, this has gone pretty fast today. Okay, folks, remember, Dollar Bill, if you're listening, be sure to get in touch with me, because your email is bouncing like a rubber ball coming from outer space. So I'd really like to see you and your lovely bride. It's been a very, very long time. I think we met in Florida 10 years ago. Yeah, a little more than 12 years ago on one vacation. But that big 4S ranch, we look forward to seeing you, buddy. And I hate to use this as a way for communication, but that's the only way I have getting in touch with you, Bill. All right, let's move on here to one other thing regarding the gold market, folks. We really, this is the XAU, all right? Now, this is the XAU, the gold silver index. Now, the gold silver index last Thursday made a perfect 61% retracement from the January low of January the 28th, okay? It also made a perfect 382 retracement of the low from November. So that's the key level to look at. Below that, very, very bad. Other than that, you know, this is still a bullish chart. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a quick review here. What we want to remember here is the long-term head and shoulders pattern that we've seen in the NASDAQ is what I believe probably the most important chart that you could possibly look at. Let's just get this up here so you'll be able to see it's a perfectly symmetrical head and shoulders pattern on the weekly contract. We should be moving over to the yes, we'll be moving over to the, I believe, we should be switching over to the June contract in the S&P also. But you can see the head and shoulders pattern there in this particular thing. Folks, if you get a chance, Google the Clint Eastwood, Toby Keith song that he wrote for Clint Eastwood. And the name of the song is Don't Let the Old Man In. And folks, Anybody that's over the age of 60 ought to really watch that, because it's about Clint Eastwood. He's 88 years old, and how he keeps on going, making all these movies and winning awards and everything. And his whole theory is, Toby Keith wrote the song, "Don't Let the Old Man In." And believe me, folks, that dude's knocking on my door. Well, that's him ringing the bell right now. You can't let that old man in, folks. You got to be able to live fast, live hard, die young, and make a good-looking corpse. But you got to listen to that thing. It's Toby Keith and Clint Eastwood. It's worth every 2 minutes of your time to listen to it, because it's really, really amazing. And Clint has never done a bad movie. That's for sure. If anybody can find one, please let me know. It's one of the few people I didn't get to meet. He and Sean Connery and a whole bunch of others that I would have liked to have met during my time, but I certainly was unable to do that. But yeah, he's still he can still play the saxophone like crazy, and he still owns his home up there in Pebble Beach, and so in Carmel. And anyway, he's an incredible actor. But that you got to listen to that movie, listen to that song, folks. It's just totally awesome. And remember to live every day in an attitude of gratitude, and may God bless.